The Calgary Real Estate Marketplace is in a great spot. Following, here I am, John's hazy crystal ball for the month of May. Okay, let's go. Calgary Marketplace first. Inventory levels are increased since last month, but they're more or less consistent over what we saw last year. Overall, however, they are also 11% higher. So inventory levels are 11% higher than what we've had in the long-term averages. I might say, why is that? Like, what's happening? Why are inventory levels currently higher than what you normally see? Bottom line, it's almost like Groundhog Day. We hear this month after month after month. The amount of apartment-style condominiums that we have, primarily due to all the pre-construction projects that are coming online, and now they're being augmented by row houses. So basically, that's where you have like a whole series of townhomes in one project. That's also getting added to the marketplace because, again, of pre-construction. Those two factors are increasing our total availability, which is basically making our numbers look out of skew, if you wish to call it that. On the inventory level, our detached homes are down 3%, which is great from a competitive standpoint. Now, that's compared to 2025 and similar to what we've seen in long-term averages. However, sales for detached homes are down 16%. Yes, 16% lower than we saw last year. However, they're similar to what we saw last month. So you might say, again, why the heck are sales slower by 16%? Effectively, the reason for that is lack of inventory. Granted, remember I just said inventory levels are down 3% over the last month. However, if you look at where those are, it's primarily in the values under roughly $600,000 to $700,000 and lower. And that's where the majority of Calgarians can afford a home. If you look at the inventory levels above $1 million, $1.5 million, or $2 million, they're higher than proportionally we would like to have, but still the activity is decent. But again, it's offsetting what we don't have at the lower price ranges. Overall, we're in a balanced marketplace. That's a change from where we were a month ago. If you recall, last several months, I've mentioned that we were basically teetering just on the verge of a seller's market of a balanced marketplace, but now we're definitely in a balanced marketplace. Overall, that means something else is wrong. Yes, apartment-style condos, it is massively a buyer's marketplace. So it's a fantastic time to get into the marketplace if you're a first-time buyer, or alternately, if you want to expand your financial portfolio and get into real estate, that's a great opportunity to buy when the prices are low. It's super competitive, so you can usually get a really fantastic deal. And now you can basically augment your passive income by having some funding coming in with that kind of investment. The benchmark price for detached homes is actually up from $724,000 to $748,000. So that's rounded off $750,000, which is pretty good for Calgary itself. Now, that's also 9% lower than we saw last May, but that's because last May prices were a lot higher for a number of reasons. The big factor being lack of land. So basically, the builders couldn't build product, so the demand outstripped whatever availability was at that time. Looking at Airdrie, the benchmark price is $515,000, which is approximately 5% lower than we saw last year. In Cochrane, prices are basically trending really well. Start of the year, we were at $525,000, and now at $550,000. So that's really fantastic, and that's only 1% lower than the top value we saw last year in Cochrane. In Okotoks, a little bit different story. It's $619,000, so dramatically higher as an average price, or sorry, the benchmark price, not average, but that's down from April and also down from what we saw last year. Now, trying to figure out why that's happening down there, because there's no real reason to substantiate that. Perhaps the values are a little bit higher than what people expect, so that could be the cause, but it's tough to say. Anyways, what's happening with interest rates? They're going to stay flat for basically the most of the year. I foresee that as early as September, possibly as late as November, Bank of Canada is going to increase the Bank of Canada rate, which is what everything is based on, by likely 25 basis points. That's a quarter point. So that's going to affect what I call variable rate mortgages. If you actually follow the mortgage market at all, in the last month to 6 weeks, the banks and all basic lenders have increased their fixed term rates by anywhere from a quarter point to as much as a half a point higher. So, but however, that has not affected any of the variable rates that we have out there. The concerns about Canada being a 51st state, the economy, God, I can just go on, the war in Iran, etc., etc. It makes headlines, but realistically, it's not affecting a lot of people. Yes, inflation is there, cost of living is up because everything from your gasoline down to things at the supermarket are costing more money. However, people are buttoning down and not spending as much money outside of the home. So they're basically trying to maintain their affordability levels and whatever they spend. Now, I believe it's as of July 3rd or something like that, the Smith government up in Edmonton has announced that they're going to be seriously looking at eliminating the gas tax, and that's going to be 13 cents a liter, which is going to help a lot of people. So anyways, that's where we're at. Let's see what's going to happen. I'll see you next month with John's Hazy Crystal Ball. Have a fantastic day. Cheers.